All right, good morning, everyone. Let's do a quick sound check. William, Steve, Satish, Rob, Matt, Marshall, Liz, Jeff, James, Geraldo, Frank, Eric. Hopefully everyone is doing well. Just give me a quick sound check. Let me know if you can hear me. And we will begin. Today is Friday, July 31st. You should be able to see a Q&A box. If you do have any questions, you can always email support@DayTradeToWin.com. This is a live presentation, so I will be answering questions that you have. It's not pre-recorded. I like to do live presentations. All right, Dennis, Ed, just a quick sound check. Let me know if everybody can hear me. We're looking at the E-mini S&P. I have the at the open. I have the TradeScalper. Here is the range chart as well over here. And we're going to be looking at the orders that exist. I want to make sure everybody understands what trading is all about. Before we begin, remember, trading is risky. It's not for everybody. If you're looking to learn how to day trade, you should get, I think, professional assistance instead of trying to trade on your own, because it is difficult to do. There's risk involved, obviously. There's a lot of profit potential that can be made, but it's very easy to lose money in trading. So you have to understand what you're doing. What we're looking at here in the E-mini S&P as the market opens is typically a higher volatility situation, a little bit more riskier to trade right as the market opens. And so the video I just did yesterday outlined how the market sometimes can swing up and down as the market moves into the beginning of the day. There's an explosion. So what we have here is the ATR, the average true range. I like to use a setting of 4. And this value that you see here at 2.33 is telling me that each of these candles here that you see has a high to low range of about 2.25 points. So, and I'm just rounding down to the nearest quarter point. So that means that if I expect to buy or to sell any of these positions, any of these signals, either Atlas line, TradeScalper, at the open, whatever the case may be, I want you to have an understanding of what to expect. And that's why I like to teach traders how to read the market, how to understand price action, and also how to have a handle on the situation. Stops, targets, trade management is very important as well. You'll also see here that I have the news indicator here, and the news indicator is something that you can download for free. We give a trial for it, and we offer it with some of our products, especially with Mentorship. We provide this news indicator for free. And the idea behind using the news indicator is to know in advance when we have some type of report that's about to be released. So if you have a news report, whether it be the Fed raising interest rates, the FOMC, or you have some type of, let's say, PPI or manufacturing index or unemployment. All right, thank you. So that's what we're looking at here. We're looking at whether or not we have news. And so we don't have any news here. Usually it's listed in red, and you can prepare yourself in advance that there is news. So we're looking for a trade. Right now I have the TradeScalper on this chart here, and I have the at the open. Your goal for each of these trades should be, especially if you're just scalping, should be a quick in and out. Now you can take 1 times the ATR. So right now you see the ATR is about 2.75 of a point. 2.86 is 2.75 of a point. And so what I'd like to do is have a target and a stop based off of that. So you always know, instead of guessing whether or not we have a target of 1 point, 2 points, 2 ticks, 3 ticks, just look at the ATR. Now, a 1-minute chart has its advantages, and I also like to use a range chart, but there are differences between the type of charts. So if you're a new trader and you're thinking, well, I've only heard of 1-minute charts or 5-minute charts, and so what this is telling me that every candle, this is a candle here, price bar, every candle here is indicating a time frame of 1 minute or 2 minutes or 5 minutes. So I'm using here a 1-minute chart.
If you use a different type of chart, and I just got this question here recently from somebody, what's the difference between the type of trading that you do with a 1 minute chart or a range chart or a tick chart or a volume chart? So the charts are all different. They all work in a different way. Based off of time, I can see here that we have a trade only when a candle closes. So when this candle closes after the 1 minute, after the 2 minutes, after the 5 minutes, we have a trade, we have a signal. So that's a good thing because we know when this candle is going to close. You can add a bar timer, which counts down. So here is the bar timer. This is something I actually recommend for everybody using a time chart. And so you can see here that there's going to be a countdown timer. It's going to count down, since I'm using a 1 minute chart, it's going to count down 60 seconds for every price bar, for every candle. And that's something good that you could use. For other type of charts, they have a tick countdown, a tick counter. So a bar timer is something that you should add here to the chart. And for a range chart here, it's a little bit different here. So let me just try to add this here to both so you can see both. So a range chart here is a little different because every price bar, every candle is not linked to time. It's only linked to the 2 ticks, 2 range for each candle. So every time the market moves 2 ticks up or 2 ticks down, you can see the new candle being created. If you have any sound issues, we have a lot of people in the room. It's almost filled here to capacity, but if you have any audio issues, sometimes the best thing to do is log out and log back in, and you should have and fix any sound issues as well. Okay, Rob? So what we're looking at here is every candle moving up or down. As soon as it makes 2 ticks, which is 2/4 of a point, so from this candle low to this candle high, from this low to this high, a new candle is created. So it's a completely different way of looking at the chart, looking at the market. So before I continue, I want to make sure everybody understands the difference between looking at a range chart, which is not based off of time, it's based off of distance, and this chart here is based off of time, where only after a certain amount of time, a minute, 2 minutes, 5 minutes has completed, then we have a new price bar plot. That's the first thing that everybody should recognize. The second thing is whether or not we have a higher volatility in comparison to other areas or other time frames, because we cannot enter and have into a trade using the same stop, whether it be a 1 point stop or 2 point stop or a 5 point stop or a target of 1 point, 2 points. It's not the same depending on how slow or how fast the market is. You can't trade the same way. So when the market is slow, we should take and look at a smaller target and a slower or smaller stop. When the market is more volatile, these candles here move much further. They go up and down, stronger, faster. And so if you have a small stop and you say, I'm only going to risk 4 ticks or 1 point on every trade, we can already see that 4 ticks or 1 point is within this candle here. This is 2.5, so the market moves within a minute up and down 2.5 points. We can be taken out of the trade very fast. And so the idea behind trading is first to understand really what's happening. Is the market slow? Is the market fast? Then we can say, well, if this value, 2.5 points, indicates that each of these candles can move about 10 ticks, 2.5 points, my stop needs to be at least this value, if not higher, to keep me in the trade. So just this whipsaw back and forth, I don't want to be taken out of the trade because of my small stops. I need to understand that. And so everybody should be looking at some reasoning behind it. Now, when the market's slow, there's no reason to risk 4 or 5 points. Just take enough or risk enough based on the current conditions. So now you see 3 points here. So the market's accelerating. It's getting a little bit more volatile as it continues. And that means that every trade that you take needs to be based off of 3 points. Rob, let me know if you're okay. You can hear me okay? Alan, Andre, Anthony, Art, Bill, Bjorn, Clyde. All right, at this point, the room may be just about full. All right, and if you do have any questions, thanks, Art. If you do have any questions, please don't hesitate to ask. Like I said, this is a live presentation. It's not a pre-recorded presentation, okay? All right, so I'm waiting for a signal. I can already see the conditions that exist, 3 points. That means that should be your target. Even if you want to be a little bit more conservative, let's say 2.5 or 2 3/4, that's fine. But at least I know exactly what to expect. 3-point move, whatever trade comes my way. Now, on the range chart, sometimes it's a little hard to enter because these candles are moving so fast. So when the market is very volatile and fast, when these trades occur, see if I can show you here a trade here. So when this trade occurred here at 32.54 on this range chart, obviously if it just occurs and blows right through and just keeps on going and you don't have a chance to enter, I don't want you to chase it. And that's a mistake a lot of traders make. So let me just expand this out here like this. So you see 32.54. When this appears, the market takes off. Now, if by the time that you recognize that this occurred and instead you try to enter down here, that's not what I want. That's not what I teach. I want you to get this price as close as possible within a tick or two, I think is acceptable. So 32.54, 32 even better, 54.50, but 32.54, that's the entry that you should get. You should not try to chase it. And let's say that now you realize that this occurred and you're all the way down here and say, okay, now I'm going to enter short. That's not at all what I want. All right, Clyde said sound is good. All right, thank you. All right, so Liz says here, are the signals based on the range chart or time, or both, actually, Liz? So what we're looking at here is either, because you can add the TradeScalper or the Atlas line to any type of chart. So we're looking right now just at the TradeScalper, and it can be applied to any type of chart. So I have both the 1-minute chart and the range chart with the TradeScalper software, and we can see whatever signal occurs first. We can see, or whatever signal occurs on either chart, we can see. So you can apply it to both. Let me just come here. So to answer your question, Liz, you can apply the software to any type of chart, and that's why I have both charts up here. Vince says, how is a 4 to 6 range compared to a choppy 2 range? Well, it's a good question. So when the market is more volatile, I would suggest you use a 4 or 6 range compared to that choppy 2 range chart. So let's say I put here a 4 range chart, right, Vince? So we'll do a 4 range chart. A lot of traders tell me that when the market is more volatile, a 2 range is harder to jump in because it moves very fast. So a 4 or 6 range chart. So I'll leave the 4 range chart here for you, Vince. If we see a signal, you'll see how it works out, okay? Anthony says here, with the TradeScalper to be in and out, if the ATR is at 3, like it is right now, would we set up an ATM for 3-tick target with a 3-point stop? Definitely not. So it's a very good question, Anthony. We're not looking at a 3-point stop and a 3-tick target. That's never going to work. Okay, so with the ATR being at 3 or 2 3/4, the profit target needs to be closer to the ATR value. So if the ATR is 2.73, the target should be close to 2.73. So in this example, I would say 2.5-point target and a 2 3/4 point or 3-point stop. So the target isn't 3 ticks when this volatility showed on the ATR is this high. It has to be closer to 1 times the ATR, Anthony. All right. So increase the profit target to 2 or 2.5 points to compensate for the volatility. And so now you have your stop and your target. Anthony, let me know if that makes sense. Oh, very good questions. Okay, good. So the mentorship class includes the TradeScalper and the Atlas line, and it begins on August 4th. So yes, it does include lifetime licenses with both the software, the roadmap, Atlas Line, Blueprint Trade, all of the software that we have is included with mentorship with lifetime licenses. And starting August 4th, correct? There's no recurring charges. It's a lifetime license. Right, Anthony. So if you look at the ATR right now, it's not always going to be 2 points or 1 point or 3 points. It's really based on what's happening. So Anthony's question here is, so the stop and profit target will be at 1-to-1 ratio, 2 point target, 2 point stop. And the answer is yes, but I always like to have a little bit of a buffer. So even though the ATR may be 2.89, I'm going to round up for the stop, so it keeps me in the trade. And let me just show you what I mean by that. If this candle here can move 2.3 points, right? 2 3/4 of a point, that means that from this to this is the distance that this candle will make, right? So based on the ATR value, I can already dictate that this current candle here is going to be 2 3/4 of a point high to low. And the doorbell was on the range chart. Okay, so I did hear an alert, audio alert. And so I have the range chart on the left and I have the minute chart on the right, so you guys can see. So if I know that this exact distance, this candle can move high to low, if that's correct, then if my stop is smaller than that or equal to that, I can get stopped out of the trade, Anthony. So that's why I like to increase the stop a little bit more to keep me in the trade as opposed to having it exactly 1-to-1. I need to have a little bit of a buffer, maybe a tick or two, not more than that. Anthony, let me know if you're okay with that question, with that answer, right? So it's not exactly 1-to-1 because it could hit, it could be exact 1-to-1 and stop me out. So I have to have a little bit of a buffer there, a tick or two extra to keep me in the trade, okay? And the 2.92 rounding down, 2 3/4 of a point, that could be your target, and a little bit more conservative, let's say 2.5 point target. So this 32.46 here entry, if you look at the distance the market could move, 2.75, 2.5, that's the target. All right, Anthony. Yeah, sure, you can customize the ATMs, but you don't necessarily have to have every single variation of an ATM strategy. As long as you have, I recommend to have 2 or 3, and then you can change them on your chart as needed or update them on the chart trader as needed. It's very simple to use. It's not complicated at all. If you have, let's say, an ATM strategy of 2 points, right? Then when you enter into the trade, you can then adjust to 3 points or to 4 points or to 1 point. So as long as you get into the market, you can adjust it very simply, Anthony. And I can show you that if you want me to. It's very simple. And no problem showing that to you. Okay, so let me see some other questions here. Well, yes, Rob, depending on the chart that you use, you'll get different signals, correct. And the audible alert and the text, that's correct. So depending on the chart that you use, the software calculates it a little bit differently. And sometimes the trades are similar or exactly the same. The algorithm for the range chart's a little bit different than using a 1 minute chart, but the signals are very similar. So we did get a signal here on the range chart, but we didn't get one on the 1 minute chart. Very good question. Liz says here, do you adjust your stop if the ATR goes up or down? And the answer is absolutely. So I'm going to show you that in a second, Liz, because that kind of goes along with what Anthony is asking. How do you move your stops and your targets using the ATM strategy? So I'm going to show you that in just a moment. Frank, the software is only available currently for NinjaTrader. The course outlines exactly for the TradeScalper, that is, and for all the other methods that we teach. We actually teach you the method. So it's not black box. You learn it. You can do it manually if you're using a different type of charting software, Thinkorswim or TradeStation or any other type of software. What software do you use, Frank? And I'll let you know if we have something on the horizon for it. Okay, so 32, 42, 50, short. right? So let me show you how this is done since Liz and Frank is asking for this here. Okay, so we come here, 32.42.50, place a trade 32.42.50, which is here within a tick, right, like that.
Order submitted.
Okay, so, and the C32.42.50, it's the same exact signal on the minute chart and on the um,
Order
range
filled.
chart. Now you see how this automatically placed it. Now I can click this and move this like this, and I can click it on the chart as well. So on the chart, it could be moved as well. So you can see this can be moved on the chart. I think Anthony was asking about that, and also Liz, right? So if you wanted to move after you have already been entered into the trade, you can move the targets and the stops. And so this is called the ATM strategy. It places the target and the stop for you automatically, and you can adjust the target and the stop while being in the trade. So it's very easy to do. You don't have to have, like I mentioned earlier, every single variation of an ATM strategy. So it's not as if you have to configure 2 points, 4 points, 1 point, 2 points. You know, you can just have 2 or 3 and then adjust as soon as you're in the trade. All right. That's the way that we use it on the NinjaTrader platform to adjust once you're entered
If you
into
want
the
to learn
trade.
more
Now,
about
Liz's
trading,
question
visit
said,
DayTradeToWin.com. Subscribe to the DayTradeToWin YouTube channel, the next mentorship class where we cover all of these methods with lifetime licenses for the software.